All right, here we go. I'm driving to Carlsbad for an appointment real quick, and I got a couple minutes, and I wanted to share this week's most common request to me, which is how do I make improvements to my property? How do I pay for it? In essence, a lot of customers have been asking this because they're getting ready to sell their house, or they love their house, they're planning on being there a long time, and they need to do improvements like a kitchen remodel and so forth. So here are the options in order of most conservative to how to finance a home remodel. One, obviously your cash. Since the stock market's not doing really well, most people's mutual funds aren't making a lot of money. Why not use the cash you have and do the remodel that way? The thing is, though, is sometimes your remodel could be a pretty good sized project, and that's your nest egg too, so you might not want to use it. One other option is using a credit card. If Home Depot or your existing credit card company is offering you 12 months no interest, 18 months no interest, why not take advantage of that opportunity to cash flow your remodel over time without paying any interest? So it's a great option. The other is the equity in your home. Obviously, I'm a loan guy. People are asking me all the time. Home mortgages are great options to utilize your equity in the existing equity in your home to do a remodel. Things like if a 30-year fixed, if you have not already refinanced for today's great low rates under 4%, refinancing and pulling a little cash out and getting into a 30-year fixed is a great option to pay off that over time. If you already have a great term on your existing first mortgage, a no-cost home equity line of credit is another great route. The things you have to be careful about that is that the rates are roughly 5.5% today. If the Fed funds rate goes up tomorrow, so does your rate. So it's just something you have to be aware of, is that there is the ability for that cost of money to increase over time using a home equity line of credit. So utilizing a 30-year fix might be more conservative of an option. From there, you'll also hear on the radio a lot, and it's kind of frustrating to me because it's not really a smart move in some ways, is the HERO program for energy efficiency improvements to your property, like solar, tankless water heater, vinyl windows, a new roof. Energy efficiency is a really big thing in California because the cost of energy is increasing a lot, and our homes are quite old, and honestly, our homes are leaking. So that's why they're drafty during the wintertime and they're hot during the summertime. HERO is a way to borrow money against your property, and it is a part of your tax bill. The things that they don't tell you is that your first payment to HERO is about a year out. So you're paying a year's worth of interest up front, which is added to your tax bill. From there, your rates are between 5 and 8.5% on a HERO loan. And of course, nothing's for free. Those HERO loans, they do charge a funding fee of about 4.99%. So if you're financing a $25,000 solar system, by the end of the transaction, you already owe them $29,000. So HERO sometimes is not the best route because of that, and HERO really downplays the fact that there is a funding fee, and they really try to sell you on the fact that you can transfer that HERO tax lien to your next buyer. But not every buyer that you want to sell your property to wants to pay your solar system at 8.5%. So it's just something to be really aware of that not a lot of people think about, and you got to be careful. HERO also is a loan that's guaranteed by the state of California. So even if you default on your HERO loan, they're guaranteed their money from the state of California. And so they're not afraid to lend you whatever you want. And in essence, that means they give you a pretty good size loan amount to borrow against. I did the math on my property. You go to heroprogram.com, you put in your address, they tell you how much they'll lend you almost instantaneously, and a lot of times it's up to 110% of your value. So if you finance the whole loan amount that you're allowed to, by the time you're all said and done, you actually owe more than what your property's worth. So if you accidentally or are put in a position where you have to sell your property, you're potentially upside down or have little to no equity. So you got to be really careful about the HERO program. There are lots of other alternatives out there. If you're not going to use a mortgage and you're not going to use a credit card, there are other alternatives to the HERO program. In San Diego, Metro Credit Union has a solar specific unsecured loan. And they are very accommodating to working with customers and utilizing the customer's federal tax rebate. When that money comes back to them, they re-amortize the loan when you make lump sum principal reductions. So that's kind of it in a nutshell. Using credit cards, using like Home Depot credit cards at no interest, utilizing the equity in your home with the use of mortgage, first mortgages or home equity lines of credit, and making recommendations to you that to be a little careful about the HERO program, because it is not as simple as it is being presented to you on the radio and in the commercials and so forth. So if you have any questions about any of these programs or want more details, I have tons of notes on all of those programs. Feel free to call me or message me privately, and I'll take good care of you. Take care. Have a great rest of the day.